Hello and welcome to Live Market Analysis, an overview of key markets with Jody Samuels, that's me, of FX Traders Edge, educating traders in currencies, stocks, and commodities. Want to get in touch with us? Email us at hello@fxtradersedge.com. Who are we? FX Traders Edge are a premier global online trading school, home of the Wavy Tunnel Pro trading system, where you can take our accelerated training at any time. Our goal is to give the trader the tools to navigate the global markets with confidence. FYI, if you like what you hear today, you may be interested in joining our accelerated Wavy Tunnel Pro trading program. Go to wavytunnelpro.com to see details. Today, we're going to cover the following. We're going to do a fundamentals overview discussing the key market drivers and drill down on the dollar index and currency pairs, stock indices and stocks, bonds, gold, and oil. Let's start with the top-down approach, looking at the fundamental key drivers, a big picture overview of the dollar, stocks, oil, gold, and bonds. Intermarket analysis is key to understanding market correlations and what is driving markets. At any point in time, there are different drivers, and the key driver which continues to lure markets is the positive vaccine news. These are my overall views and assumptions that the bond market has turned and that we will eventually see higher interest rates. And higher inflation means gold up, dollar down. Oil is in a trading range, up first and then down, and stocks will continue to go higher. How do I come to my overall view? I read economist reports to establish my views. Let's start with the dollar index. The dollar index has been trading down since the COVID-19 outbreak in March. The COVID-19 vaccine news initially drove the dollar index higher, but it quickly reversed. Let's look at the dollar index and the major dollar pairs. The box is where we ended up the day the vaccine news broke. Shortly thereafter, price moved slightly higher and then reversed at a key level against our moving averages and proceeded to trade lower. And since the euro comprises almost 60% of the dollar index, with the massive rally in the euro, the index is dropping. Let's move to the monthly chart and see the potential for this move. On the left, we have the monthly chart going back to 1985, and on the right, we have zoomed in on the latest price data since 2012. On the left, we can see that we were in an uptrend. This latest move was in an uptrend, and we broke down through the trend line. That's very significant. So moving over to the right, you can see the head and shoulders pattern here with the left shoulder, the head, and the right shoulder. The neckline is our target, our initial target. So the target is 88.25 with current price at 91.15. Once we broke down through this minor support line over here, price continued to trade lower. So the next stopping point is 88.25. The US dollar index hasn't been this low since April 2018. Let's look at the scanner. This is a screenshot of the US dollar pairs taken yesterday on Wednesday. Today's Thursday. And this is how we use the scanner. It's a trend heat map from the weekly down to the 5-minute. Blue means it's a bullish trend. Red means it's a bearish trend. We use the 5-minute to find trend changes when all of the boxes are blue or red. Well, if all of the boxes are blue and then the 5-minute turns red, we know we're having a correction if the trend is still entrenched, moving higher. And then once we have that correction and we have the shorter time frames red, we look for the 5-minute to turn blue to join the trend again. And we can be alerted to this. We can send an email to ourselves to say, let me know when the 5-minute turns blue again. And I'm going to show you this because the next day, look what happened. The pound actually turned blue across the board. And where did this signal turn blue on the 5-minute? At 133.66. Current market 134.84. So up 120 pips from that signal. So this is the scanner. Even more important than that little detail is the fact that the US dollar is down across the board. So these are all of the dollar pairs with the foreign currency first, which means that all of these foreign currencies are bullish vis-a-vis the dollar, and hence the squares are all blue. The dollar CAD, the dollar yen, and the dollar Swiss, because the US dollar is first, all of these squares are red, meaning the US dollar is selling off. So this is a unanimous US dollar sell-off. Normally it doesn't happen like that. This is one of the tools that you will have access to in the Wavy Tunnel Pro Accelerated program. So the dollar is down across the board. With the spike in coronavirus cases in the U.S., investors are selling dollars. Also, with talk of further fiscal stimulus from the U.S. government, gives encouragement to the risk-on environment, such as the commodity currencies like the Canadian dollar, the Aussie dollar, and the New Zealand dollar. The risk-on trade is expressed through the yen pairs. So on the next slide, I have filtered for the yen pairs. And this is the scanner of all the yen pairs, and one can see the unanimous risk-on sentiment as all of the yen pairs are blue. Investors are buying the major currencies against the yen. Let's move on to bonds. U.S. Treasuries have also started to turn down. Interest rates up. This is the U.S. government bond 10-year yield. So Treasuries, U.S. Treasuries, have been a safe haven for investors for years. With the risk of increased fiscal spending and a higher inflationary environment, some market strategists are calling for the end of the bull market in bonds. Looking at the technicals with the gold down channel, we see that we are just against the channel line. And once we break through it, which will also be a break above the previous highs, interest rates should continue to move higher. It might take some time, but eventually interest rates will go higher. The stock markets continue to perform well, with trillions of dollars being pumped into the system for monetary policy and potential fiscal stimulus. With the positive vaccine news, the U.S. indices continue to rally. Initially, investors rotated out of NASDAQ and into the Russell Dow and S&P once the vaccine news was released, but now all of the markets continue to rally. For the year, the Dow is up 4.5%, the S&P is up 13.36%, the Russell is up 10.04%, and the NASDAQ, the biggest gainer, is up 37.7%. So this is also reflected on the scanner. The top 4 rows are the U.S. markets. They're all blue. And when something is dark blue, it means the signal just turned within the last few bars, few candles. For the European markets, the higher time frames are blue and the shorter time frames are doing retracements. Let's look at the Dow. This is the Dow. Notice the gold vertical lines on the right connecting the awesome oscillator with price. The awesome oscillator is one of our indicators that we use in the Wavy Tunnel Pro. After each correction, when the awesome flips from red to green, that is a signal to buy in a bullish environment, to join the trend. Now let's look at our wave count from our Elliott Wave Desk. So the wave count projects the Dow to move higher. This is the weekly chart, projecting the Dow based on Fibonacci ratios to move up to the 34,000, 35,000 levels before we have a correction. This is the S&P, looking all the way back on the monthly to February of 1970. we see a major move up, and on the right we can see the corrections that have taken place. And again, looking at the awesome oscillator and drawing the vertical lines, when the awesome turns from red to green, that provides a signal to go long to join the trend. And the S&P has taken out the recent highs. This is our wave counts for the S&P from our Elliott Wave desk, also expecting the S&P to trade higher towards the 4,000 level before we have a correction. Moving on to NASDAQ, this is the weekly chart. We have had, after we had the rotation into the Russell 2000, NASDAQ actually corrected down, and now it has since come up to retest the highs. This is the NASDAQ wave count. Unlike the other indices, we expect it to have a bit of a correction before the NASDAQ continues its journey higher. Finally, looking at the Russell 2000, we can see the rotation into the Russell 2000 with this acceleration higher, making new highs over the last trading week. Let's look at the wave count for the Russell 2000. So we are expecting the Russell to continue this move higher into the 2000 area before we have a correction down. The Russell 2000, which consists of small cap stocks, is a proxy for the reopening trade. Note that the reopening trade won't be a one-way street. With COVID infections surging worldwide, traders will be balancing short-term pain with long-term gain and optimism. It might be worthwhile to see if this rotation continues for a while, even with the COVID cases on the rise. It appears that the market is still pricing in positive outcomes on the COVID vaccine front despite the surge in cases. Because the market looks ahead. It just prices in. It's very quick to price in market expectations. Also, small cap stocks on the Russell have underperformed large cap stocks over the past 5 years. So it appears that this tide is turning as well. So now let's look at some specific stocks. These are the stay-at-home stocks. We see Moderna and Pfizer at the top. So with the vaccine news, you can see Moderna and Pfizer having had jumps. The stay-at-home stocks like Amazon, Peloton, Netflix, and Zoom have seen some profit taking. So make sure to buy the dips to avoid whipsaw price action. Looking at these same stocks using our Wavy Tunnel Pro setup, all 4 of these stocks are consolidating with Elliott Wave patterns, which when complete should trade higher. But these stocks are tradable on the smaller time frames for day traders as well, where you can go long and short. You can certainly see the sideways price action on Amazon, on Peloton, on Netflix, and on Zoom. Sideways to down in the corrective environment. Now let's look at some value and reopening stocks. The value stocks and the reopening stocks are doing very well. Berkshire Hathaway and JP Morgan are solid value stocks. Las Vegas Sands and Walt Disney are some of the stocks that would benefit from a vaccine. These are daily charts. We can see the pops. All 4 of these markets gapped higher on the vaccine news, and they are in bullish mode at the moment. These are the stocks with the Wavy Tunnel setups on them. Each one was bullish on the setups before the pops and before the vaccine news causing the pops. And I can't go into the specific trade setups right now, but every single one of these markets were bullish and gave ample time to get in before the market traded higher. Let's move to gold and oil. Gold is historically a hedge against inflation, but also a safe haven investment. The move to risky assets, remember we talked about the risk on environment, means a move out of gold temporarily. And oil is a commodity that benefits from a vaccine as it marks the return of international travel. Let's talk about gold. Gold, since it's considered safe haven and the vaccine gave the market a risk on appetite, it took some heavy duty losses. That's this piece right here. Gold dropped out, it corrected. In fact, if we run the Fibonacci tool on the previous swing move, gold retraced to the 50% Fibonacci level right over here. Gold will gain its strength once again once fiscal policy kicks in with more spending, and then gold will outperform on inflation concerns. So we have to be patient with gold, but it seems that this correction is almost over. And we can look at gold from a wavy tunnel perspective as well, and we have a nice weekly reversal candle pattern here at major support. And down here, it looks like we have completed this corrective cycle down and that now we are ready to resume the uptrend in gold. This is our wave count for gold. Assuming that we have completed this wave 4, once we get confirmation, then gold should continue to move up in a wave 5. Oil is a commodity that is benefiting from a vaccine as well, but it will likely be short-lived as the world has changed and travel won't be the same for a while. So we are looking for oil to top out soon and trade down again. Up first to find a top and then a reversal. Now looking at the monthly on the left, we see the downtrend lines and oil is trading within the channel. On the right, if we look at this last pattern, oil came off the lows and then we did a nice little correction, and now it looks like we're going to trade higher and retest the downtrend line. Now if we look at the wavy tunnel with oil on the left, that would mean oil moving into this area over here, the $50 to $55 area, before turning around. And if we look at the wave count is also calling for a move up to the $50 to $55 range, and this would be the end of a B wave, which is a corrective wave, and then oil should head down again. So thank you so much for listening to me today, and I hope you join our Wavy Tunnel Pro 2021 5-day accelerated trading and mentorship program. The coaching and mentoring starts January 24th, but if you sign up today, you will get access to all of the course modules. You will have a 5-day training program mapped out for you that you can begin right away, and then you can take advantage of our daily services, and then we will meet up again for the formal coaching and mentoring starting January 24th. WavyTunnelPro.com. Thank you and see you next time.